We would like to welcome everyone who has joined us today to this online conversation. The main focus of today's event will be crypto and blockchain. You can submit your questions to our chat, and we will choose some of the questions and ask them at the end. Without further ado, I'm pleased to introduce you to an international business and finance mentor, the CEO of CryptoP, and a published author, Kevin Smith. Thank you for taking the time and to talk to us today, Kevin.
Hello, good to be here. Thank you for inviting me.
It will be best to start with a small introduction. For those who have joined us recently and haven't yet had the pleasure of learning about the work that you do, could you please tell us a little bit about yourself?
Yeah, well, I started, I guess I've been very fortunate in having had a rather interesting, meandering career, but I started working for banks in the City of London as an analyst and then jumped into business development. And then way back in 1996, set up a business and finance consultancy firm and have worked in 45 countries or so. And then back in 5 or so years ago, I decided to do a master's degree in global management and looked at how businesses accessed finance. And many of the answers to that came down to fintech, technology and finance in one form or another. And that got me very much involved in that whole sector. And so for 5 or 6 years, I've been very much, as I say, focused on all things fintech, and that clearly involves blockchain and crypto. And as these things do, one thing leads to another. And I've been CEO of CryptoPie for some years. And more recently, I've actually written a book and published a book called Growing with Blockchain. And that focuses on blockchain and how businesses can actually utilize blockchain in their business in order to grow whatever size the business happens to be. So I hope today's chat will be interesting for our listeners, looking at it from a number of different perspectives, from both crypto and from blockchain, and why both are increasingly important to us in the world that we live in, whether it's a coronavirus world or whether it's a pre or post coronavirus world.
Yes, I hope everyone will enjoy today's chat as well. And my first question, I think, starts sort of at the beginning, in the sense that in your discussions about blockchain and cryptos, how do you see people's understanding of those topics and how the two are linked?
I think, that's a perfect place to start because sadly, the people's understanding isn't great. I guess it's like any new technology, any new phenomena. You have early adopters, you have people that understand quickly and adopt quickly and benefit quickly. And then you have others that are, almost deniers in that they're either not aware of what is happening and the benefits that can bring, or they are aware but they still want to ignore it for one reason or another. So if we look at them, I guess cryptos is something that is more commonly known about than blockchain as such. Clearly the two are related. And what happens is typically if you ask about blockchain, if we start at that end, people will think, well, we know something about blockchain, and isn't that what cryptos are, and aren't cryptos a scam? And that's the sort of a fairly typical sort of thought process. And all of that really is led by the media. And I guess you could say there's elements of truth in those, but those elements of truth are blown up out of proportion, as we've said, by the media. And that has been because, yes, there have been some scams associated with cryptocurrencies, And that's because at a number of occasions during their lifetime, they have grown in value very, very rapidly. So that doesn't or shouldn't take away from the actual real benefits of digital currencies and cryptocurrencies and Bitcoin in particular. But what it does do is it gives opportunities for people to focus on those negatives. And those negatives are the scams have come about simply because some people see it as a possibility to get rich quick. And wherever people see a get rich quick scheme, then other people are very quick to jump on that and come up with scams that simply try to get them to invest in projects that aren't real or what have you. And then, as I say, what people have failed to understand is that the bigger benefits of cryptocurrencies, and they failed to understand that blockchain isn't just about cryptocurrencies. So that's sort of where we are. I think at the moment, people's understanding isn't good, and a lot of that understanding is actually misunderstanding.
See that changing, the misunderstanding changing, or the people's overall understanding changing, or how, I think the better question is, how can it be explained better to help it change in a more positive way?
Yeah, I think as any technology advances, as it is seen to become more mainstream, you have people that are early adopters or people that are caught out by these scams or whatever variants there are when something is new. As you get more and more understanding, you get more and more mainstream people, organizations involved, because they really do start to understand the benefits. And what is most definitely happening now is cryptocurrencies are maturing, and that is changing the market in itself. And you also have blockchain is very, very obviously being used in many different ways by many different people. And individuals and companies are really beginning to understand that. And so both of those things are beginning to mature and be more understood. So often people say that again, there's a common link. People say, well, I don't understand blockchain, so therefore I don't trust it, so therefore I'm not going to use it. And to me, there's always very quick, obvious retorts to that. So I could simply ask you, do you understand how the internet works in technical terms? And you, like me, would say, no, not really. And my next question would be, and do you use it every day? And your answer would be yes. Or I could do the same with, do you understand how your car engine works? No, not really. Do you use it every day? Yes. So blockchain is definitely moving along that scale from not really quite understanding how it works to it nevertheless becoming acceptable and usable. And it's also being seen and being seen to be adopted by many different organizations and people. It was back over a year ago now that HSBC, one of the biggest banks in the world, announced that they had already remitted 250 billion US dollars using blockchain in their foreign exchange transactions. And, you know, I could cite you hundreds, thousands of different cases for how blockchain is being used in different sectors, in different ways, and it is bringing massive benefits. So blockchain is being understood better and is being used more, which is helping people to understand it more. And so it's a positive cycle. And likewise with cryptos, as cryptos are maturing and settling down, they are losing their view of being something that is speculative, something that is either going to make you rich or you're going to lose all your money because it's a scam. And they're starting to settle back into a position where they should be, where they're seen as a very real asset class that has an actual position in what should be in everybody's portfolio. So you're seeing fund managers, some of the big Swiss banks, Fidelity, one of the largest fund managers in the world, are actually recommending people to have a small percentage of their investment funds in cryptocurrencies, because they are the ones that are those that will offer better returns. So they're already maturing from this speculative, nobody quite understands them type field into something that is more understood. And as that, as I say, as that cycle goes on, it just positively reinforces itself all the way through.
My next question would be is that looking at crypto specifically now, could you tell us more why they have become more mainstream, and do you have any recent observations from the volatility caused by the coronavirus shocks being seen by all the financial markets?
Yeah, I think really I started to touch upon that in the answer to your last question, in that volatility is where lots of people were making money originally, but the volatility was also something that made them less of a normal investment asset class. So the wild swings on the markets on a literal day-by-day basis was something that could be taken advantage of if you knew what you were doing, but nevertheless made it potentially higher risk also. As the currencies, Bitcoin and the other large currencies, have matured, that volatility has reduced. So they have become still more volatile, still more, there is still a greater ability to make money from cryptocurrencies than from many other asset classes, but nevertheless the volatility has settled down more. And as that process has happened, that is one of the main reasons why the investment funds that I was mentioning, so Fidelity or the Swiss banks or a whole range of other ones have mentioned, that is why they are now starting to promote the fact that their clients, their wealthy clients, should have funds held in these currencies, because they do have the ability to provide much higher returns than many other asset classes. So that's one of the reasons. But I've always felt that, for me, one of the real strong benefits that cryptocurrencies have is the fact that I've always felt they should be decoupled from almost every other asset class. And what I mean by that is, in a recession, when the music stops, as it were, and the world economy slows down, most of the other asset classes are linked in one form or another. The price of oil goes down, and other commodities goes down, etc., etc., and they're all linked, and they vary to degree for the level that they rise or fall, but nevertheless they are linked. And I have always believed that cryptocurrencies are not linked in that same way to any other currency. So for me, it was particularly interesting in March or so, when the whole coronavirus economy situation started to happen, because what did happen is, for the first few days after the stock market crash, when everything, or crashes around the world, when everything else started to slow down, cryptocurrencies also started to come down. But very, very quickly they stopped, and they were indeed proven not to be coupled to all the other commodities, all the other stock markets in the same way. So I was pleased to say that I do feel that I was proven correct in that they're decoupled, as I've said, from other asset classes. So that in itself is a very, very good reason why you should have them in your portfolio. It is a hedge against coronavirus coming back, or trade war between China and the US, or whatever else it happens to be that affects stock markets, commodity markets worldwide. It does seem that cryptocurrencies aren't affected in the same way. So I think that's been a powerful learning curve and a good reason why they should be held. And again, as they become more acceptable, as more fund managers are telling people that they should hold them in their investment portfolios, in their pensions, again, there will be a sort of a growing demand for them as they become more acceptable. And so therefore that should, again, hopefully drive the price.
And with the cryptos becoming more mainstream, there is also an appeal of cryptocurrency as a form of payment. However, the high volatility makes it seem sort of off-putting. What are the positive ways of hedging the risk?
Well, I mean, originally the way of that was maybe by having a spread of different cryptos, so Ethereum and Bitcoin and some of the other major cryptos, and just having, as I say, a number of different ones. But what has happened over recent years is there's been a large increase in the number of stable coins. And stable coins are simply a sort of a specific coin that is pegged to another asset. So it can, in theory, be pegged to anything. You do get stable coins that are pegged to different types of commodities and all sorts of different, very specific assets. But the most typical, the most common stable coins are pegged to either the US dollar or the euro. So the reason for doing that is you have all of the benefits of a cryptocurrency, that you can remit it and it is held out of the banking system, and all of these sort of electronic money, digital money benefits. But nevertheless, it's hedged against the volatility of a Bitcoin or some such. So one of those examples would be our own UPI coin, and that is pegged. So one of those coins is pegged to €1, exactly as I was describing, and that is based on ERC20. So again, the same sort of basis as most of these coins are, and it's ideal for for crypto and another trading type practices. So you're getting the best of both worlds in that case, and that's really the best way of going about hedging your bets, as it were, against the volatility of individual cryptos. But nevertheless still having all of the benefits of that.
Or to look at the UK system in specific, where is the banking system in the context of cryptos? And are there any licenses or permits that are being issued and that people should look out for?
The UK is an interesting one in that the FCA, the regulator, is seen as both one of the best, one of the strongest in the world, which has benefits. So if you're operating here and you're FCA regulated, then pretty much anywhere else in the world you will be, it is seen as something of the gold standard. The downside of that normally is that it's more difficult, it's harder, it's more challenging to sort of get that approval. Having said that, the FCA is one of those regulators in the world that has got it's very interested in progressing digital currency and moving forward. So in the regulatory world, they have set up something called sandboxes. And these are basically areas where if you're trying to come up with a new financial product, you can test them, operate them in areas that are sanitized, so that if you like, real clients are not going to get hurt, not going to lose money, but nevertheless they're sponsored and are sort of provided by the regulator. So it's the FCA in London, and it's a number of other leading regulators do this. And in fact, a number of those regulators are linked to each other so that they're all operating the same sort of systems. And London very much is at the forefront of that. And they're trying to encourage people in fintech in general to come here to go through those sandboxes so that they come out the other end with fintech products. So whether that is linked to open banking, or whether it is linked to any other form of digital currency, or any other fintech, it is sort of they're trying to promote themselves as a leader in that. And where we are with that, though, is it's still very difficult, it has to be said, for a business to go into a normal bank on the high street and open an account and say, I want this for cryptocurrencies or whatever. At the moment, that is still difficult here, as it is most places in the world. But having said that, there is a movement towards it. Barclays Bank in particular, I know, has started to do it. But again, you're not going to do that just by going into your local branch manager. It's a more complicated process. I am aware of a bank called DAG Global, and they are expecting to become the first digital bank in the UK. So a digital merchant bank, as it were, in the old-fashioned banking terms, and they are expecting their license later this year. They've been working on it for some years, and so that's not just crypto at all. It's, as I say, a digital merchant bank. So there's a strong movement towards it, but these things are taking time.
As we have mentioned at the beginning, you have published a book about blockchain. Congratulations on the recent publication.
Thank you.
What can you tell us about it?
Well, this sort of came out for the reasons, many of which you've touched upon today, in that we were finding that there was not much knowledge, and we were finding that businesses from startups through to multinational companies were either interested about blockchain and what can it do for us, or they didn't actually know anything about it. So when I was approached by a publisher to look at pulling this book together, the reason for that was because the publisher felt there was indeed a gap in the market. Books either talked about what blockchain might be possible to solve at some stage in the future, or they were very technical. So the purpose of this book is very much to look at written in normal language so that it's easy to understand by somebody that isn't a coder, or somebody that isn't a technical focus on blockchain. And the idea of it was to help anybody, as I've said, from a startup through to a multinational, to look at it and think, so is blockchain useful for us? And it comes all the way back to that question that you asked, I think it was your second question, that, well, what can we do to get that message out there more? And the answer to that really is education. So the book is an attempt to try and get that message out and show all sorts of real world benefits of what is possible and how it's possible, but much more to the point where it's already being used. So we've been very lucky. We've got people like Dell writing a chapter about the hardware and the systems that are sort of needed, and that actually is, well, it's actually not too difficult. You can use your own systems and your own hardware. You can simply migrate the blockchain over onto it. We've got people like IBM writing chapters in it. And then we've got people that literally is, at the other end, is a startup that was a startup that is making sustainable fashion wear from recycled products. And from day one, all of their supply chain has been on blockchain. so that they can prove the provenance of their product coming through. So as I say, it's written, there's 19, 20 chapters written by 15 different leading industry experts from different angles, all trying to get across that message of why it's useful, how it's useful, what's already happening, and where the benefits are. And what's important is you should never think that blockchain is going to be the answer to everything, but nevertheless, blockchain is able to answer questions that haven't been able to be answered before. And in so doing, they'll do all the things that are the benefits of crypto, which again is showing the link. So it's cheaper, it's quicker, it's safer. So it's all of those sort of things linked together. And because of the distributed ledger basis of it, it's totally and utterly safe. It can never be changed. So you have all of these benefits, which again proves that whilst crypto isn't blockchain and crypto isn't Bitcoin, nevertheless there are links between it, and you can understand why people think along the lines that they do. So that's the book. It was actually published last week, and is already selling well on Amazon and everywhere else you can buy books, both in soft copy as an ebook, but also in good old fashioned hard copy book. So as I say, our sort of attempt, I guess, at trying to spread the word and encourage people to look at it and take it seriously and understand those benefits.
I think the last question of this main block would be, we've looked at what is happening with cryptos and blockchain now, but what are your predictions about them for the future?
Well, I think what is going to happen very much is the fact that it's going to be more and more of the same. So as we've said, the big benefits are the fact that it's quicker, it's safer. You can achieve things with this process of time stamping activities. So you can open up supply chains, you can have different supply chains, you can have payments, you can tokenize assets, you can do all these different things in a way that has never been possible before. So you can have fractional ownership of things, just as normal share ownership is fractional ownership of a company. You can have fractional ownership of a building in the way that you haven't been able to in the past. So you could have a single apartment that is owned by 100 people, as I say, in a very quick, easy, simple way of doing it. Or what we're seeing is gamification, where the loyalty schemes that are used are put on the blockchain, and those tokens that you're getting, you're not just getting simple rewards that you can exchange back for I don't know, discounts or something from where you've bought the goods from in the first place, but they are exchangeable with a whole host of other things. So they're different. They're different coins, as it were. So I think the way that it is going to go, it's going to open up in so many ways areas that is going to be so big. And I think it is going to be one of those revolutions where people don't quite understand the opportunities or how big those opportunities are or what they're going to lead to when they start. So in my mind, I do honestly think of blockchain, and in blockchain, I do include cryptocurrencies. But I think it's going to be along the lines of electricity. So electricity was one of those things that's transformed the world, or maybe the internal combustion engine, the engine for the car. It's going to radically change the world and how it operates, or indeed the internet, because it is simply already affecting every day of our lives in many different ways. And the people that are ignorant about it or don't believe it don't understand that, well, actually it's affecting almost everything that they're doing already, and that's just going to get bigger and frankly and better, and make things so much safer in so many ways. So I think it is something that we will get involved with, and as I say, it's tomorrow's technology that will be continuing to grow and change into areas that we will I guess see it grow. And the fact that we're all here today talking about it, we're not necessarily the first adopters, but we're definitely not those that are not believing in it. We're here because we believe in it, and we know that it's going to grow and what those possibilities are.
Very excited to see where this all leads us in the future. We're now going to talk, we take some questions from our viewers. I have a few from some of the social media, and then we also have a few questions from our chat. The first question is, I wanted to buy cryptocurrency, and couldn't quite figure it out. Seemed difficult. I would very much like to try myself in trading. Do you have any suggestions?
Yeah, so there are a number, well, there's many different platforms that you can buy cryptocurrencies from. What I would say is, of course, you need to make sure they're good platforms, regulated platforms. I personally would suggest sticking to some of the bigger obvious currencies. There are thousands of different currencies, so I would stick to begin with the Bitcoins and Ethereum type coins. But in terms of the volatility and such things, again, we can go back and look at what I mentioned earlier in answer to a question, in that if you have something like UPI on our own platform, and you then use that to trade on the XPI platform, which is our version of it, you can actually take out that volatility to begin with, and then you can hold your investment in the stable coin, and then you can buy or trade between currencies when you're wanting to. So that's a quicker, simpler way of doing that. And also on that platform, for those that are more advanced, if I could perhaps put it that way, so that the more professional traders or those with bigger investment portfolios, the next step up could be we also have an OTC or over-the-counter market, and that enables you to buy much larger amounts of currency off market, so you don't have to go through the normal routes. So you can buy or sell directly, and that will give you a potentially a different price to having to go through the standard markets. So there's lots of different ways, and it would depend on how much you're looking at buying or selling, how sophisticated an investor you are, and by that I mean how experienced you are and how much money you're wanting to invest. But as I say, lots of different ways, but look at our own website and our own platforms, and that will give you one example of what's possible. We like to think a very good example, but as I say, there are of course others out there.
This question comes from Vyacheslava. The question is, my interest in crypto started in 2017 when altcoin was at max volatility, and it was very easy to substantially increase the portfolio in the short term. Now the market has changed and you can't do that anymore. Do you have any advice?
Yeah, well, again, I mean, this is something that we touched upon earlier. In the early days, it was Potentially, it was easy to make lots of money, but best will in the world, it came down to luck, because the market generally was rising and rising quickly, and we've all seen those very nice graphs that you bought it for 300 and 1 year later it was trading at 6,500 or whatever it happens to be. The difficulty was the volatility. So we've also seen those graphs where it was $19,000 or $20,000 and then 2 weeks later it wasn't. And so all of that basically came down to luck. Now, many people were lucky. Many people made lots of money. Many people didn't. And so it was easy to make money if you got the timing right. Potentially, it was also easy to lose more money. So what has happened now, because that volatility has reduced, it's become a more normal investment type decision. So it is a more skilled process that is required, but nevertheless maybe a more certain process. You've taken away a lot of that downside risk as long as you know what you're doing. So yes, you as an individual can still trade the markets as you would with any normal stock market or even commodity market. But most people don't have the time or the knowledge to do that. So you would look at doing that in other ways. And again, we have a fund, again, there are many out there, but we have a fund where you can invest into that fund, and then the fund managers, the traders themselves, will actually trade in and out of Bitcoin into fiat, back in again, back out again, in such a way that the market rises and falls, if you like, are being maximized. And what you are doing is you are relying on their knowledge and their better knowledge and their better ability to trade those markets. Our fund, again, lots of different ones and lots of different ways of going about it. But our fund last year made a return of over 450% in BTC value over the course of that year. And that was simply by trading in and out of Bitcoin at the right time. And with the best will in the world, you and I aren't sitting in front of screens doing that, whereas traders are, and that's where they're able to use both their knowledge and their timing to do that. So it's probably a case of investing in a fund that is doing that rather than trying to do it yourself. And the idea of that is not only that you will probably make more money, but you are also almost definitely reducing the risk of losing money on the other side.
Next question comes from Natalia. She says, "Hi, Kevin. What do you see as a natural outcome of the COVID-19 situation when it comes to cryptocurrencies?"
I do think that, well, if you look at any of the major stock markets in the world, the economies of those countries, there has been a big shock to the system. So yes, it depends which particular share, but nevertheless, the markets were... markets always trade on expectations, not on reality. So the markets will factor in what they expect to happen. And to begin with, many of the markets, as the coronavirus situation started to unfold, didn't seem to be particularly upset by it. And then all of a sudden, they realized that it was actually going to be quite big, and the markets collapsed. And then, and some shares just simply within the space of a week lost 60-70% of their value. Some of those have recovered quite a lot, some of them haven't. other companies didn't actually lose terribly much because they happened to be as a business that was making protective clothing, for example, or whatever it happens to be. So of course there are variations, but I think if we come back to what I said 20 minutes ago, that cryptocurrencies don't seem to be coupled with other commodities, other currencies, other markets in the same way. And I do believe that as the world moves on, so not strictly coronavirus, but as we see more and more complications with the US and China or whatever it happens to be, and as we see, there will undoubtedly be more coronavirus cases around the world before this is all over. And I would imagine that we're going to see more people thinking that maybe I won't necessarily go so far as to say that digital currency is a safe haven along the lines of gold, but Forbes magazine did publish an extremely interesting article about 9 months ago, which actually did liken gold to cryptocurrencies because they had an awful lot of the same similarities in terms of how people looked at them, albeit cryptocurrencies are far less mature at this stage. But I would imagine that coronavirus is going to make people more concerned about the possibility of the more regular markets that are traditionally seen as being safer, actually being more volatile and more risky than they thought. So they've lost more from their pensions or their investment funds than they were hoping. Therefore, well, maybe I will put some more into cryptocurrencies in one form or another. So I would imagine that the cryptocurrencies will benefit. Rather a long answer to for me to summarize in about 6 words at the end, but I would imagine they would benefit.
Another question comes from Anastasia. Hi, Kevin. What do you expect from Bitcoin in 2020 and 2021? What would be your recommendation in buying and selling or selling?
I'm not going to give you any recommendations, would be the first thing. My feeling is that it's still, well, at the moment, it keeps trying to break the 10,000 US dollar barrier. It keeps, it's spent some months now, a couple of months maybe, getting up to 10,000, sliding back to 9,500, going back up to 10,000. I would imagine there's a number of things. Immediately what comes to my mind is we've recently had the halving, which traditionally has driven some sort of growth in the price following that. So I would say that was one argument why you would expect Bitcoins to continue to grow. They're still, of course, trading considerably less than their peak a couple of years ago. And whilst, of course, that may have been a false peak, nevertheless, I think that it should have quite a lot higher to go than it is at the moment. I would say reading and trying to read a balanced view of different market makers and traders' comments on their expectations. For every one that sees it as trading flat or negative, there's 5 or 10 that see it as growing in value. So, and Bitcoin in particular is one of those. The fact that it is still so big in the market, its percentage of the overall market, it is the US dollar of the currency world, isn't it? Whatever else it has or doesn't have going for it, it is the one that people will look to. My feeling is it's going to be going up rather than down.
The last question that we have time for today is there are more and more stable coins available on the market. Do you see this number to be increasing? And do you see this trend to occur in non-crypto-centric businesses?
Yeah, yeah, because stable coins are being introduced for many reasons, and that's really because the ecosystem that they're linked into, it's a form of currency that is tradable. Well, first of all, you had the stable coins that were fixed to a very specific asset, and they are where they're linked into a small ecosystem, and they're simply, as I say, some sort of rewards type basis or what have you, and you can use those as payment for other things within that small ecosystem. And then you have at the other end of the spectrum the stable coins that are linked, as I said, to the US dollar or the euro. And the benefits that they are now displaying are being seen ever more widely for the two reasons that I said, in that they have the benefits of being a digital currency and all that goes with that in terms of the safety and the payments and the speed. And they have the benefits of not having the volatility of some of the other normal currencies, the fiat currencies. So there are going to be more movements to that. But again, as more and more businesses that are not crypto or specifically focused are seeing the benefits of that, you're getting more and more businesses developing their own ecosystems that have their own stable coins. And they might be stable coins that are linked, as I say, to euros or dollars that can be used within their ecosystem, or they may simply be larger ecosystems that have set up their own coin. But yes, I do see there being an ever-growing number of stable coins that are being used in more ways. And I do actually see them becoming much more intertradable in one form or another as well, because it seems to be the logical route to go. And you've even got more and more countries looking at developing their own digital currencies, and some of those are being looked at as being pegged in one way or another to other currencies. So that in itself is effectively a stable coin. So I think it is something where we're going for very good reasons.
As I said, this was the last question that we have time for today. So thank you very much, Kevin, for sharing your wisdom with us today. And also thank you for our viewers for the participation and for submitting your questions. I hope you enjoyed our online event. It will be available online on all our social media.
Thank you to everybody for coming. And thank you for having me.